a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Technology ETFs seem interesting at the moment. We're going to find out why from our ETF Research Director, Nina Mishra. So there is a new twist in the saga on tariffs on some technology items, right?
Yes. So yesterday, Trump administration announced that they are going to delay tariffs on some items imported from China until mid-December. And those items included laptops, smartphones, and toys.
Okay.
And that is why stocks rallied, although they are down today again.
Yeah.
But yesterday we saw a good rally, and technology stocks led the gains because they are most exposed to trade-related uncertainties. Technology sector, in fact, derives about 58% of its revenue from overseas market.
So it's like the highest amount.
Yes, highest of all sectors. But technology remains the best performing sector year to date among all S&P 500 sectors. It's up 28% year to date versus just 17% gain by the S&P 500 index. And earnings, so the sector earnings have been largely better than expected, and according to Zacks earnings trends, 78.7% companies beat EPS estimates and 63.8% beat revenue estimates.
Wow.
Now, investors continue to put money into technology stocks and ETFs because there are so many new growth areas for the sector, particularly things like cloud computing, artificial intelligence. So investors believe that even if the economy takes a downturn, these stocks will stay supported because of demand for their services, their goods and services related to these areas. And within technology also, while some areas are very cyclical, like chip stocks, semiconductors, but there are certain areas like software which are more defensive in nature. So that is why investors think that even if global growth slows down, tech stocks will continue to see good growth.
All right, well, let's take a look at some specific ETFs that you have examples of. Technology Select Sector Spider Fund, first of all.
Yes. So I have the three most popular technology ETFs here, and I would like to highlight the differences between them so that investors can decide which one they want to invest in. So XLK is the most popular technologies ETF. It has 21 billion in assets under management. Pretty reasonable expense ratio of 13 basis points, and it tracks technology sector stocks from the S&P 500 index. Now you would recall that last year we had discussed on the video as well, S&P and MSCI had realigned their GICS sector methodology. And due to that change, some important tech stocks like Google and Facebook, they went out of the technology sector into communication services sector. So that is why ETFs that track S&P and MSCI indexes, they do not have those stocks in their technology ETFs. If you expect to see Google and Facebook in your tech ETF, it will not be. They will not be there.
But that change really didn't throw everything up for grabs, right? It was kind of like a subtle transition.
Yeah. So some important tech stocks and media stocks, they went into the new communication services sector. That was the important change there. Now, to learn more about this ETF, you can go to the web page, the quote page on Zacks.com. It's a rank 1 strong by ETF. And then you can also go to the external home page, Spider's web page for this ETF, and learn more about holdings and other details. So as expected, Microsoft is the biggest holding with about 20%, Apple with about 70% weight, and then you also see some credit card payment companies like Visa, MasterCard in there, PayPal also, and some more traditional technology companies like Cisco, Intel, Adobe.
All right. Vanguard has a technology ETF.
This is the ticker VGT. This is also very popular, and it is one of the cheapest technology ETFs. It charges just 10 basis points. AUM is again $21 billion, very popular, and it tracks an MSCI Information Technology Index. So again, you will not see Google and Facebook in this ETF. And again, you can go to the quote page on Zacks.com. This is also a rank 1 ETF, and you can also go to Vanguard webpage for this ETF to learn more about this ETF. Now, both these indexes are pretty similar, so you will see similar holdings for this particular ETF. XLK and VGT holdings, they are pretty similar, with Microsoft, Apple, Visa, MasterCard, Cisco, Intel among the top holdings.
And then iShares, U.S. Technology ETF.
So this tracks a Dow Jones technology index.
Okay.
So that is why this does not follow the GICS methodology, and GICS changes did not apply to this index. So you will see Google and Facebook in this ETF. So if you want your technology ETF to contain those stocks as well, maybe you can look at this ETF. This is slightly more expensive with 43 basis points expense ratio, and smaller compared to the other two with $4 billion in assets under management. Now, to learn more, you can again go to the quote page. This is also a rank 1 ETF. You can also read our reports, our articles, and go to the web page, the iShares web page for this ETF to look at holdings and other details. So you will see similar holdings, Microsoft and Apple, but slightly lower weights, because you will also see Google and Facebook in there, which are communication stocks, but they continue to be in this ETF because this ETF was not affected by GICS realignment.
And how do they all stack up performance-wise?
So the first two, the State Street and Vanguard products, because they are pretty similar and track pretty similar indexes, they have almost similar return of 28% year to date. The iShares product is up about 25%, whereas the S&P 500 index is up about 17% this year so far.
And do you own either?
I do own VGT in the ETF investor portfolio that I manage.
All right, thanks for all that information. Don't forget, other ETF information always in that section of our website, Zacks.com. Use the Funds tab in the top toolbar to help guide you there. And don't forget ETF Spotlight. That's the podcast that Nina hosts and produces each week in the podcast section of Zacks.com. Go down to the very bottom of the homepage, click on the word podcasts, and it will help guide you to that. With Nina Mishra, I'm Terry Ruffalo.